Thanks for joining us. I'm Marlon Bowling with you, your tour guide to the ag commodities. I am joined by Mr. Brian Hoops, the president of Midwest Market Solutions. And Brian, we actually got our weekly export sales numbers here. Let's take a look at what we had for the weekly numbers. And then you said we had some overnight action too. Let's take a look at the weekly numbers here. Now on the corn, we actually had a total of 691,600 tons. Yeah, I mean, it was in there. Let's take a look at the soybean sales last week. Now, they seem to be pretty decent, 1.75 million tons. We knew it would be high, but we didn't know exactly where it would come in. So 1.75 million tons. Now, that's if you count the current marketing year and the next marketing year and combine them both. Now, let's take a look at soy meal, 241,200 tons, soy oil, 500 tons, so not very much there. And on the wheat, we ended up with a total of 189,900. So we'll just call it 190,000 tons there. Grain sorghum sales, 3,500 tons this week. Upland cotton, 59,000, and we had rice coming in at 77,700 tons. So I want to go ahead and bring in Brian Hoops and see what he thinks about this. Any news on the overnight front, too?
Yeah, Marlon. So a lot of things, I think, to pick apart here with these export sales and the private sale announcements this morning. So first of all, the private sale announcements was 118,000 soybeans sold to China, which is, almost 2 cargoes, so a decent amount. But then there was also 718,000 metric tons of soybeans sold to an unknown destination. That's a huge amount. That's about 26 million bushels just on that particular sale. So those are some big numbers. And you look at what our private sales were. China shows up all over this export sales report in the form of switching from unknown destinations back to China. We see that in soybeans, we saw that in corn, and to a very much a lesser extent into the wheat market. So we look at these numbers and you kind of dive into them. This is the third largest weekly soybean sale of the year out of the 13 weeks of this marketing year. So pretty good numbers there for soybeans. And you look at all the private sale announcements that we've had so far this week. We've had I think 4 consecutive days, or 3 out of the 4 days. So we've had sales this week. I haven't added all the totals up this week, but it's going to be a really large one. And so next week's sales report could be one of the biggest of the entire marketing year for soybeans. And the core number wasn't bad. It's really close to where we need to be to reach the USDA forecast now. And I do expect the USDA to lower their export forecast in tomorrow's supply and demand report, which means corn sales probably aren't getting a whole lot worse. USDA needs to make some downward revisions, but at least our corn sales are kind of stabilizing in here. And that maybe that is an effect of the U.S. dollar dropping, and we're starting to see, business come back to the U.S. in a small amount. So corn sales, I think, are going to remain well below year-ago levels. Wheat sales are right in line with the miserable pace from last year. But, we have a kind of a window of marketing here through the end of the year before that South American production becomes available. So we'll continue this trend of seeing better export business.
Well, let's take a look at how the market is reacting after these weekly numbers came out here. And of course, the overnight announcements would come out after the Globex market closed, just to point that out. So they haven't reacted to that yet. Let's take a look at the close of Globex here on the corn with our quotes provided by Bar Chart. We had March 2.5 higher at 643 3/4 this morning on the soybean trade. At the close of overnight trade, we had January up 6 3/4 at 1478 3/4. March up 6 3/4. We'll have to see how they want to open up here in just a few minutes at the bottom of the hour. On the wheat in Chicago, March was up a nickel at 754.5 per bushel. Kansas City wheat overnight, we had March up 1 3/4 at 850.5. Minneapolis was up 2 at 904. We'll talk more with Brian Hoops, and we'll cover the beef and pork exports. Might be a surprise in there for you. We'll talk about that when we come back. All right, we're talking with Brian Hoops of Midwest Market Solutions. Now, we covered the grain export sales for last week, and now let's cover what we had for the beef and the pork export sales. Now, on the beef side, it was about the same as last week, maybe just a little notch higher at 17,900 tons. But what is this? Exclamation point, question mark. Pork, a negative 5,500 tons. That means net reductions, and that's for the current marketing year and next year combined, a minus 5,500 tons. We had net reductions for the remainder of this year of 7,900 tons, and new sales for next year only 2,400. Brian, that's not necessarily what the trade had been hoping for. They were looking for or hoping to see something more like 40,000 or something like that, not a -5. Now, what does that mean?
Right. Yeah, it's kind of the case of good news on grain exports and bad news on pork exports. First of all, the beef numbers, those are pretty decent. You combine the two marketing years and you get a really strong beef number. And even China showed up this week as buying U.S. beef. So some good export numbers there. Probably going to support our cattle trade this morning. We did have lower cash trade this week, couple dollars softer in the Southern Plains. Not totally unexpected, but I think what was unexpected is these slaughter numbers staying relatively strong. We expect another 125,000 head kill week or day today, and that keeps our kill weeks right in line with last week, around 660,000 heads. So that's pretty aggressive, and it's going to support this cattle industry. But the pork market, I think you're going to see some weakness on the opening here this morning. Maybe a gap lower in the futures if they react to this number, which they probably should. It's really disappointing. As you mentioned, we'd like to see 30 to 40,000 metric tons each and every week, and now we've got a net reduction combining the marketing years. Our shipments are still good at 32 million tons, but the sales are pretty much a disaster. China canceled a bunch of pork. Mexico canceled a bunch of pork on us this week. So that's going to be a disappointment. So yeah, you would expect soybeans to open in one direction and hogs to open in another this morning.
Boy, and it's been a tough go already this week for the hog market. Let's see how we closed yesterday, just for a point of reference. We'll take a look first at our live cattle close yesterday. On our quotes provided by Bar Chart, we had February live cattle down 7. They were at 153.55. When we finished up our feeder cattle market, we had the January 90 lower at 180.90 per hundredweight. March was down 90 cents as well. And if you recall, on the lean hogs yesterday, we were mixed. We had February down 27 cents yesterday at 86.65. April was only one tick higher at 92.82. I will note on the February lean hogs, looking at a chart here, it looks like it went down and it's resting right now on the 50-day moving average of support, and that's about the only moving average support that's left. So, Brian, thanks for pointing everything out. I appreciate all the information this morning. You did yeoman's work, and we'll talk to you again soon. Brian Hoops of Midwest Market Solutions. So, Janet, it could be an interesting open when we get things rolling here at the bottom of the hour. Stay tuned.